So finally now we move to the topic of blockchain foundation value proposition to be presented by Mr. Michel Khazzaka. Please try to limit the presentation to 10 minutes to give some leeway for questions at the end.
Thank you, I'll do my best. Can you hear me? Okay. So thank you very much for this introduction and to the AUB for this opportunity. If some of you were here 2 days ago, we've presented blockchain in about 3 hours. But today is a special focus from the blockchain and the financial institution industry and cryptocurrencies. As the title says, blockchain is a new foundation for economic and social institutions. We've elaborated too much on that 2 days ago. Let me start by a link between the 3 presentations this morning and mine. I was going more in a roundtable discussion. I thought we were going to be discussing much more together. I hope this is going to happen during the question and answers. But as you've seen, this artificial intelligence, big data, are trying to optimize, to accelerate the production and the optimization of the services and the operation excellency of the banking industry and financial institutions. What's blockchain is making something really different. It's reworking a whole system. It's trying to propose a way to rework the whole system. So for example, instead of better providing loans with lower risk, it's trying to change the model of loans giving in a single new approach. For example, there are today solutions over blockchain. Okay, in cryptocurrencies, they are still, they're in production, but they are not too much mainstream. When you can have a loan in just a single click. You ask for a loan, you have the loan, you consume the loan, and the smart contract will automate the processing of the payments of this loan. And you didn't go through projecting what we already do manually and optimizing it through machine learning and big data. So it's just changing the whole system. Now, why is this happening this way? Digital revolution is being set to 4 major forces. The first force, don't take the order, let's list them. First force is the appetite from the consumers, pushed by the GAFAs, the Google, Apple. They're pushed to have new ways of service, new facilitated service, fast service, better service. So there's an appetite from the consumer to have a better thing. Banking is trying to catch up. Second force is regulation. Regulation is trying to move things sometimes by force, sometimes by accompanying. For example, the SP2 in Europe. Instant payments or faster payments or open banking. They're trying to push the banking sector to do something for a better service or to regulate it. Third force is fraud and security. There's a huge effort to be made in fraud management and cybersecurity these days. I don't want to remind you about OneCry. I don't want to remind you about fraud in payments. Just one statistic, fraud in payments online is 20 times higher than fraud in proximity payments. This is just an average. It can be better, it can be worse. But there's much effort to do, and there's a force here pushing the digital revolution. And the fourth force, or maybe the number 1, is a technological innovation that's happening. Big data, machine learning, blockchains, robotics, etc. Now what these forces are doing are trying to work together in a cycle way to accelerate the advance. And it's a challenge for all the industries to choose a way. So let's say blockchain can bring instant payments, but did the banking industry choose blockchain to do it? Not necessarily, not all the time. For example, I've been working with STET in France and EBA on the settlement, clearing and settlement mechanism to become instant. This is going to be in production in a couple of months or next year anyway. I've been working also in Australia since 2011 and 10 on their new payments platform that allows instant payments, that allows portability and mobility of bank accounts instantly. What does this allow? This allows banks to fail as a business as usual. If a bank fails, it can sell all its accounts to other banks. And in one click, either the customer can choose his destination bank, or the bank can transfer all his account, all his history, all his preferences, all his credit payments to the other bank instantly. Now, you can see that this revolution is taking place very, very strongly in an accelerated way. And it's a battle. It's a war. The head of Visa said the war of payments started actually 2014. And everybody is looking for the best way to monetize the data, to reach excellency, but also to be ready for the future, because the future may be not just about optimizing alone, or not just about doing machine learning and predicting something. We're changing the whole system here. If you don't know about DSP2, DSP2 will oblige the banks to open an APIs, to open their accounts for third-party participants, to go and access all the accounts of Michel Khazzaka and every bank he has accounts in, and to allow them and me to initiate payments in any one of these banks. So this is a big shift in the market, but ask yourself this question: how long it will stay as a new thing to do? If the business model of the banks are changing, maybe because of the blockchain. Now let's, a quick reminder about where's blockchain today. Today, this year, 95% of enterprises, I've said this 2 days ago, have ongoing blockchain projects. And they're implementing it with at least 1 million euro per project as a budget. More than 70% of them have that much budget. And this is how much have been invested in blockchain this year. Now, what's wrong with certain parts of the payments industry, financial institution industry? This is just one example of why it should be revolutionized. And the question now becomes how to optimize it. Well, would machine learning optimize this? Would big data optimize this? These are the steps of a single card payment. And we are not talking about cross-border, we are not talking about other types of payments. I will not go through them, but you can see that the payer, in order to pay the payee, the merchant, just 100 euros, he sometimes would need to take 7 days to have the money, the merchant. And he will not receive the 100, he will receive 98. When 2% are being spent on all the value chain actors here. The payment service provider, the scheme, the bank acquirer and issuer, the clearinghouse, and the central bank. And there are much more participants in the network that are taking part of this transaction. Well, this works well, as I said, in proximity payments. It works much less better, much less good in the online payments. Well, because payment industry using cards and using this old scheme of doing payments is not built for a digital world. When you talk about Internet of Things, machines need to talk to each other and transact with each other, and sometimes they need to pay each other. Would you plug them to a bank account? It would be the most silly thing to do. Maybe the best thing to do is to commoditize, to industrialize the financial institution into the internet itself. So internet-connected objects can transact between each other without going to the whole old-fashioned or old mechanism of clearing and settlement and opening bank accounts. And so we need a digital money, we need a digital cryptocurrency, we need a digital payment system that is built for the new era. The new era can be called Web 3.0, call it whatever you want. So finally, about what's still wrong today with the money and payment system, that's why we exist in consultancy around payments. I've been working in this since 15 years ago. Well, because it's too much regulated, there's too many things to do, and which just is very good. It gives us too much business, and I'm thankful for that. But there's a large margin of improvement. Now, what blockchain brings to this payments area is that it's much more direct. A payment is direct, is peer-to-peer. Is it from a person to a person, from a bank to a bank, from a company to a company? It is near real time. Now, it can be actually instantaneous, it can be, but in Bitcoin, it is near real time. And it simplifies the business model. Today, banks, some of them at least, with whom we are working on in Spain at least, are looking for a way to become themselves a bank of cryptocurrencies also, in addition to the bank of classical fiat currencies or euro currencies. Well, this just is a print screen from a wallet, a blockchain wallet, where you can have Ethereum, Bitcoin, and others. Well, banks are looking for a way to upgrade their core banking system, also to become a registrar for cryptocurrencies, for people who want to have also in their wallet not just euros and dollars, but also Ethereum and Bitcoin, for example. I'm trying to accelerate here. I hope I would ask and answer more questions later. But what is the best approach of adopting blockchain in large industries? This is a very hard topic. So first, we've seen that banks understood what Bill Gates said, 1990s something, that banking is essential, banks are not. So banks, they ran into adopting blockchain, saying that it might disrupt us. We want to adopt it. We want to master it. And they've created R3CEV, for example. This is a large consortium between major banks worldwide to create their own blockchain for doing clearing and settlement mechanisms worldwide. Now today, SWIFT also has a blockchain solution for that, and we've also been testing it with certain major banks in Europe. The results are not that satisfying, neither from R3CEV, neither from SWIFT. The problem is that they are trying to bring a solution that has been made to change their business model and to make it work just with the existing business model, just to accelerate what already exists. And this is a very wrong approach of adoption of the technology. What is better to do is, you need to start by business to consumer services. This is the first place to start adopting blockchain. Business to consumer can be like bringing wallets of cryptocurrency, but also can be of granting loans thanks to blockchain, but it's B2C. But putting all the banks and making them all of them work together on a single protocol over blockchain is a nonsense today. They are unable to do it for classical instant payments. It takes years to put in place, and then it will depend on the roadmap of adoption of each bank to make it work. But as we said 3 days ago, when you ask yourself what's a good use case for blockchain, there are 10 criteria. One of them, if there's a common referential. One of them is it's a common scheme that everyone should have the same way. And this is the case for these consortium use cases. But the problem is that all of them lack maturity on the technology. The technology itself is not very mature. It has started to become mature. And what you see here is the roadmap that is ideal for the adoption, and we are seeing it taking place. The ones that are failing are trying to shortcut many things. Today, we are seeing insurers, payment industries adopting the technology in production way. We've talked last time about AXA with Fizzy in insurance, but there are many use cases, for example, in loans. When you can get the loan in cryptocurrency and then you can sell it on a marketplace to get it in euro if you want, but you will still pay it in cryptocurrencies also in real time, because you're shortcutting all the existing system, the old system. Now, you cannot shortcut everything. When you have today a wallet of cryptocurrency, you still need to go through the KYC. I still need to provide my provider of cryptocurrency marketplace of my banknote account, my passport ID, so many identification documents, because they are now obliged to become KYC themselves, compliant. You can still shortcut this, but it's a black market then. You are going pure blockchain, pure Bitcoin, without going through a legal process of acquiring, selling, and transacting with this technology. So as a reminder, the shift is very important. It's changing the whole system. When we are today trying to put machine learning above the web applications and above the stack of internet, web, World Wide Web, web apps, and optimize it with big data and machine learning, we are optimizing an old system. Here we are trying to build a totally different system. Give you a couple of examples. Outside the financial institution, then in the financial institution. Connected cars today, smart cars, they generate terabytes of data, up to 1 terabyte per data per day. What do you do with that? This car is trying to take decisions on people's lives. So the problem with big data and machine learning there is that it's sometimes fuzzy in terms of compliance, reliability, liability. They are trying to put blockchains, connect these cars with blockchains through smart contracts to guarantee what's lacking in the big data part. And if some of you have read the book of George Gilder, Life After Google, The Fall of Big Data, well, as I said last time, he's a friend of Google CEO, Apple CEO, Oracle CEO, and he's saying when you need a data center that drinks a river of water just to get the difference between a cat and a dog, this tells you how still shallow is the depth of the innovation in big data and analytics, and how foundational is the blockchain and what it's bringing to the new web that we are creating. So please remember that blockchain, first of all, is a shift in the business model. This includes compliance and data monetization. One of the major banks in France with whom we were working is about data monetization. So they have all the data on all the data centers, all in the agencies, all the branches, And they need the governance of the data. How do you govern this data? When you govern the data, you can say, I'm governing it point A to point B. Or you can say, I'm providing a complete new platform where all these branches can contract with each other and create a catalog of data products. And whenever a central entity needs to access this data, the data is still remaining at the branch. It's owned by the branch. But there's a contract that is compliant to GDPR that tells you what you are processing in this data. And as I've also said, I'm also a certified data protection officer in GDPR. GDPR allows me to be the owner of the data, not my bank. So again, you can see that a one solution from an editor, SAP, Microsoft, IBM, will give you a point-to-point solution of a problem when a new technology here is giving you a new foundation to change the problem, to change how you attack the whole problem. Lastly, this is one example from Banque de France. Banque de France, this is just to tell you how this central bank tried to adopt the technology. First thing it does is to test and learn after the awareness. It tested it on logs only. It took just the IT department, it took all the logs of the systemic servers, and it put all the logs on a blockchain. Why? This is a ledger. It can store logs in a synchronous way, in a tamper-proof, in an immutable way. So now when there's an attack, the attacker maybe can erase some parts of the data, but he will never erase the forensics ledger on the blockchain. So it allowed them to master the technology internally. As you can see, it was not a consortium between central banks. It wasn't changing the world. But next, they're implementing it between the banks. When you issue an IBAN, an account identification number, usually it was the central bank who issued it for everyone. Now, the central bank tried to lose some power. It's actually not losing, but it seems this way. And to allow the ecosystem of banks to issue these numbers. And the Banque de France is the bookkeeper of this ledger. And this is one way of putting blockchain into test. It's successful today. I will stop here, and I would be happy to take more questions maybe afterwards. Thank you very much.
Thank you, Mr. Khazzaka. You discussed the need for new digital form of money and payments, and you presented a roadmap for adoption, hopefully, of a legal form of blockchain in financial services. I want to thank all the lecturers, and I'm going to open the floor for about 5 minutes of questions, if you don't mind, Professor. Yeah, go ahead.